Today's topic is capital loss harvesting. So I hope you all understand that when you have a capital gain, it's very hard to manage that. Meaning, if you have a business, right, you can write off your expenses to decrease your net income. But when you have a capital gain, when you sell your stock or rental properties and stuff, there's very few things you can do to manage the taxation on that gain. So one of the method you can lower your capital gain tax is through capital loss harvesting, and I'm going to show you some numbers. There are other ways to save taxes on capital gain. I have another video on that one. Please explore that one. But let me share my screen and let me tell you what I'm talking about. So let me just give you a profile on this taxpayer. It's again a lot of numbers. Don't focus on everything. This taxpayer makes $150,000 as a W-2. Spouse makes 50, and let's say they have $85,000 of long-term capital gain, $15,000 of short-term capital gain. If you have stock options, RSUs, you sell your own stock, then this is a real problem, right? Now, you cannot do anything to save taxes on this one other than what I'm showing on my screen. Ignore this tax exempt versus this. This section, you can pause this and look at this. This section talks about what is the break even for capital gain tax rate. We'll have another video on this one, but just focus on this up here. For this taxpayer, like I said, was already making, this almost $100,000 of capital gain. The tax they're paying, which is federal tax, short-term capital gain get taxed at the marginal tax rate, right? 24, state tax rate, and net investment income tax. If you make more than a certain amount, you also have to pay this Obamacare tax. And long-term gets at 15%, 4%, and again, same net investment income tax. So there's no tax saved right now because we are not harvesting loss right now. But let's say you sell one of your loser stock that you're holding and with the hope of going up, but you're not very sure. You sell that 5,000, you're saving $1,600 in taxes right away. So the actual loss is not 5,000, it's net of those amounts, right? You have to understand that. Let's say there's another one. Let's say you want to sell another one for 80. You have $18,000 you sell for long term. There's another $4,000 capital gain. That's tax saving. So total, you're saving almost $6,000, which you could have not recovered if you sell this other year. Remember, other year when you sell this, your losses are limited to only 3,000, meaning you can only deduct 3,000 every single year, slowly and slowly. So you should really try to get rid of your loser stocks that you don't have any faith in the year when you have a huge capital gain like this. And other thing you need to be really careful is this. Look at this. We have $18,000 there right now, right? When I look at what happens if you bump one more to $19,000, tax savings goes to $9,000 versus that $1,000 changes it to almost $9,000 from $6,000. The reason is being this net investment income tax. It lowered your taxable income so that this tax doesn't apply anymore. So you have to be very careful how you manage those. These are complicated formulas. It took us a long time to build this. You can do your own calculation, but work with the tax advisor to can show you this kind of numbers. Okay. So all I'm saying right now is, look at here. You're losing $24,000. This is a loss, but that's not actual impact. You gain $9,000 back. So you're only losing 15 grand. You're getting $9,000 back just because you did the right strategy. Understand this, and you will not have a big loss, and you can use that money, go put somewhere else, and then maybe have a better return. Thank you.